Hey, this video I just want to show y'all what I'm looking at. So as you can see, it's 9:30 at night on the East Coast. Is where I'm at, and it's 9:38. And normally I have been trading the like the S&P 500 and the Nasdaq most, but and during the Tokyo session, these are the three sessions that I look at on my chart. And during the Tokyo session, New York is asleep or not working, and the markets are just flatline. And then when London wakes up, they start trading. That's when the market starts moving. First, somewhere in this first half of London, and then obviously the bulk of the action is the last half of London to about the halfway through New York, and that's but a lot of times you'll get a move that'll go all the way. Sometimes you'll get movement further, but in general, this is like the most of the bulk of the volume, what you can expect trading, like anything to do with the dollar or the US stock market. But my point is that what I'm trying to say is that I want to find something I can trade in here, right? So I said, all right, let me go and look at what is available for trading on Tradeovate, and basically I'm just on a demo account right now, trying to get a feel for the position sizes on these currency indexes, which is the Australian dollar and the Japanese yen, because as you can see, these are the sessions that are happening. And so I just started looking at these right now, like probably 20 minutes ago, probably 30 minutes ago. I started looking for more opportunities, because in order to meet my goal, my financial goals, I need to double up on my opportunities that I am taking advantage of. And so I will be looking for opportunities in here, the last half of London to the first half of New York. And then I'm going to be looking for opportunities from about 7 p.m. to midnight, something like that. And then that actually gives me, if all I did was trade, that would give me 1, 2, 3, 4, 5, 6, 7, 8 hours of sleep. But I mean, obviously, I'm doing other things, and I'm determined not to live on the chart. I'm going to have and what I mean is I'm going to have targets for where I want to enter and where I want to exit. Also, more than that, profit targets, and actually, basically, you can say loss limits for the day. But I don't want to bore you. But the most important thing is the target goals of profit target for the day and week and month. The monthly, that's what ICT, Michael Joe Hudson says we should focus on. But what I ended up seeing on here, as you can see, is that I don't really want to trade the yen, and I kind of suspected this before I even looked at it, and the reason is pretty obvious. There's just all these nasty gaps right here. There's one real big one there, smaller one here, and then you have these spikes, these really nasty spikes. Huge one here, big one there, you know, medium size ones here, whatever. But you know, there's optimal trade entry right there. So, you know, I mean, and actually, that didn't pierce. But you know, say you got in here, and that's gonna kill you right there. Another spike there. If we could just look, let's get on the daily. And see, you can't really see as much, but actually you can see there's a spike there and there. I'm trying to keep the scale because I want to go back to this 4 hours so I can just show the comparison. Let's see. Yeah, so it looks like the yen is something that I'm not going to be interested in trading for that reason, because let's see if I can get the scale back to the way it was. So here we've got the scale back to basically how it was. Pretty much even here, and you can see the difference. So you can see the difference. So there was a spike on both of these at this time. That was 6 a.m. And then, but here you can see the spike was huge on the yen, not so big on the Aussie right here. So much, you know, less crazy on the Aussie. Huge spike right here on the yen. And you know, as you can see, the Aussie did not have any kind of crazy reaction there, neither there nor there. So it looks like the Australian dollar is going to be the preferable asset to trade. Let me just take a screenshot. Actually, let me there we go. That'll have the day on there and everything. So yeah, so anyway, I'm probably not going to be trading the yen. Sorry, yen. Sorry, not sorry. You know, it's just business. I'll go ahead and take this profit here. Just I know I'm negative 1,500. This is just a practice account. I gotta reset it. But what I'm gonna do next is just go through here. Let me actually look to see how old the price action is. And the reason I say that is because Okay, over here, this is it right here. That's not the yen, sorry, Australian dollar. But if we go here, Australian dollar, the FX, actually let me do CME. Is that the one that I'm on? I don't know. One of these is gonna be one of these is gonna have. Oh, you know what? Hold on. Yeah, one of these is gonna have older price data. Should. Let me check. (2007), 2008. 2000. So that might be. (1966). I don't know, and I don't want to bore you with it, but the reason that and I don't really need it, honestly. But what I was going to do was try to establish some past price behavior based on key levels. But like, okay, so basically where I would start is this. I'll put one key level here. Another key level down there. And you know, obviously this is the scale here is gonna be messed up, but let me put one more and see what it looks like. The next one would be the orange. So like I said, this, you can't really pay that much attention to the scale at the closer to the zero on any chart, but like you see, once we get up here, it starts to, I guess you say, normalize or something. But that's when you start adding in the rest of your key levels. 750. It's going to be your yellow. And actually, all these are going to be dotted lines. And I'm going to go back and add the solid lines here in just a minute. But this is going to be your 625 white level. this is going to be your 875 white level. Okay. Copy that price, go here, set it to a 1 pixel line, red, paste the price in there. Okay, lock it in. And then the next one is just real easy. Clone 0. That's going to take care of that one down there, as you can see. Looks different now. Copy this price. Clone. Change the color. Okay. Copy this price. Change the color. Copy. Lock it. Change the color. Clone. Copy. Paste, make sure it's locked in. You can go back and make sure all that's locked in by checking this little lock. You can actually unlock them all at the same time. But you know, this is halfway. You have the red and the red. In terms of your numbers, the orange is halfway to this red, but it's the same exact ratio in terms of price from this orange to this red. It's just that this is where price it is currently. It's all the data that we have, but this is, whether I was recording or not, this would be what I would be doing right now. Setting this up, you know, the reason is because if you look, this thing, obviously I'm not done drawing my levels. This thing moves, or you can hit a lot of your highs and lows around the Asian session, right? So you could get in and really ride that sucker, all the way to wherever it's going. And you don't have to wait for New York necessarily, but like, look, let me check. I haven't even checked the numbers on this, but like, anyway, it's the movement compared to the spread, right? And I think it's pretty decent. I'm not sure yet. Like I said, I just started looking at this. Like, I mean, I've looked at the Australian dollar before, obviously, as a forex trader, but I haven't really traded it because it's when you're trading forex, you're thinking more usually really that's already up 40 just in that little move from my entry there. Look at that. That's crazy. Just that little movement. Yeah, so a lot of potential on this, which is why I'm drawing these levels. So let's go back and finish or do some more real quick. So obviously we've got these huge levels. This would be 0 0 0 0 So as you can see, 0 0 0 0 0 0. That's the 100,000 level. Okay, so that's what that's going to be. 100,000 level. Okay, and it's 100,000 points. Basically from that red to that red. The next one that we're going to do is 10,000. So we got to find that zone. Start breaking it down. Where are we? What 10,000 zone are we in? As you can see, we're between 60 and 70. That's going to be our range that we're trading in right now. So what I'm going to do, I'm going to make this thick and clone it. Put my 6 in there. That's our 10,000 level right there. That's our halfway point right here. The orange. And obviously 750 here. That's our yellow. Now, this is our 250 level, 250 or 2500. In this case, I'm going to leave that as is and just understand that what that is, because I know that it's between these two levels. I know that's a yellow level in terms of our 10,000, but I need to know that that is a higher level. So what I'm saying is if I put a yellow over that, you would not be able to see why that's so special. And as you can see, price is clearly bouncing off of it, respecting it, and that. So very important level there, and we need to be clear about that. So let's keep going. Okay, let's get our white levels. Let's do a shortcut on this time. Okay, so we have this. We're gonna copy that price. Okay, we're gonna change the color to that. We're gonna get our calculator. Okay. And so anyway, we're gonna paste this price in there, and all I'm gonna do is just add 0.0250. I'm gonna copy this price, and I'm gonna clone this, and I'm just gonna paste this in there. We're gonna see where it goes. So it goes right into place, and I'm gonna just add 0.025. Copy this price, clone, paste price in. Okay, you can see it goes perfectly in between there. That's how you know you're doing it right. Plus 0.025, and so hopefully you can catch on to what I'm doing, or you watch my other videos where I explained it already. But you know, basically all these levels are just divided in half. Everything's half, 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 half. You know, that's halfway. The orange is halfway between the red, the yellow's halfway between the orange and the red, and the white's halfway between the yellow and the red, or the yellow and the orange. So what you do is you just take double that distance and you add it on to this, and it gives you that. So this distance here, as you can see, from the 0.60,000, that's 0.61,1250. So you just add 2,500, boom, you get that. 2,500 onto that, boom, you get that. 2,500 onto that, boom, you get that. So that makes that a much quicker thing there. Obviously I'm just messing around right now with my trade, but so we are in the 10,000 level. We're still on the daily, so we need to go even further. So we're gonna see what next level we can break down. Let's go and see where we're at. So 60, let's see. So we're between 60 and 70, and you know, you ask yourself, I'm asking myself, you know, what do we need here? It just depends on what you want to draw, how much you want to draw. Like, you could just draw basically I've done this before where you just draw these. $65 is already up there. It already has a level for it, so I'm not going to draw that. But you know, go down here to 63 and draw in one there and lock that in. And these whole numbers, you'll find price reacting off of them. And if I go up and draw 66, you'll see that we'll see the same thing happen up there, and I can say that confidently without even seeing the price action, just because I've been doing quarters theory, or using quarters theory, for long enough that I know every market respects it. Every market, you know, basically reacts and moves based on quarters theory. So I don't have to wonder if it works. I know it works. I know that price is going to react off that level. I don't have any doubt. So let's see if I'm right. So you can see back here, price comes down, And yes, this is the major level here, but it breaks through that, and where does it turn around at? Boom, 66,000. But make no mistake, this is the big level where we're at right there. So it's just that when price breaks through a big level, sometimes it goes to another level, and it looks like this is a barrier here. The 66,000. Obviously it broke through, went down to here, back up, but look, it even reacts off that again. Comes down, this time doesn't break it. The reason that I was saying that you might just want to draw these and just trade off these is maybe obvious or not, I don't know, but it could get too busy. Like you could end up having a little bit too many lines on your chart. So it just all depends on what you want. But like what I'm looking at is this my entries, right? So where, like for example, if I had already been having this chart yesterday and I knew that price had come down to here after New York, I could have said, okay, let me try to buy right here, right? Where's price going? Up here, most likely. So you have to go back and study price. Now up here, price went up and it did not reach, it turned around. Okay, where did it turn around at? Well, this is where your other levels. Now we're on the 1,000. So we started on the 100,000, then we went to 10,000, which is this. We started here, then we went to 10,000, which is this. Now we're on this level, this 1,000 level right here. So that's what we're concentrating on right now. So obviously same thing as always. Halfway is right here. The scale's getting so small sometimes my brain has to get down to that level, but just imagine that this is red and this is red and this is halfway between, which is orange, and obviously you got your 750 level up here. Now this is I will not be drawing the white levels because the reason that it's too much. It's too much. I'm not drawing the white levels this far. This zoomed in, there's no, just no. But anyway, you'll see what happened. There was a reaction right here when price was going up. It rejected that level, went up, tried to get through. We had a doji on the 1 hour right here. Price turned around. Optimal trade entry, sell, boom, and another optimal trade entry off the previous day's high and low right here. So what I mean, I just mean that right there. Trying to get it where it's easy for you to see. So as you can see, your optimal trade entry would be right there from your previous day's high and low. And then for this day, it would have been New York session, high and low, optimal trade entry right here, boom, It's easy to say that in hindsight, but my point is that you can find trades based on what the price action tells you, or the candlesticks tell you, or the patterns tell you, or the institutional analysis, whatever you're using, based on what that tells you. I just got like lost, like, so I don't know where we are now, but okay. Well, I was looking at that spot right here. Yeah. So, but even on a bigger scale, optimal trade entry based on this previous swing high and swing low right here. Boom, huge trading opportunity right here. And just all kinds of money that you could have made right here. So the actual entry was 6 p.m. 6 p.m. is right for me. Let's see, daylight savings time. I triple check this. I'm OCD like when it comes to details and things, so this should be right. November 7th to March 12th, that's the white. 6 p.m. would have been right before the Tokyo Open, and that's when it took off. Let's see what happened between 7 and 3 a.m. There's a 6, and then 3 a.m. Just a little move. Let me mark this entry and zoom in so we can kind of get an idea of that day's trading, what might have, or actually what actually happened. So you can see just one of these days, or you think it's going to explode, right? So yeah, you're looking for a reaction. Now look at this confluence, right? Okay, so this is something interesting that I've noticed. Okay, so you have this Fibonacci, right? So what is a Fibonacci? It measures energy, right? And we know that everything is a vibration. Everything is energy, from like a quantum physics level or whatever. So price on the chart is just energy charted, right? It's belief charted. It's people's belief charted on a chart, and it's energy. And that's like kind of how I can explain the Fibonacci there. It's more to it than that. You could literally spend probably a long time studying Fibonacci and whatever, like not just in terms of trading, but in terms of just like in general, whatever. I'm sure there's a lot of applications to it, but I'm just trying to get to what I'm trying to say. But anyway, so there's this key level here. Obviously the color coding, that tells you the significance. So while this red one is more significant than this orange level, halfway between these two 1,000 levels, so while the red one is more significant than the orange one, in this case, just as a standard like way of understanding quarters theory, like talking in terms of just the color coding system, actually in this case the orange would be more significant because it lines up with the Fibonacci levels, and so this quarters level even is less significant than both of these. So it did blow through there, and it looked like there was some selling coming off of this 61.8. but it went up. And the interesting thing here is that price got to the 0.64,500 level, and then tapped into this 70% retracement level, and then the confluence of these two things, also being that it was on New York session or whatever. You can look for an entry inside here, which what I'm going to do now. Zoom in on the 15-minute and look at that entry that we were just talking about. So you know that when you see this kind of reaction here, look at when it was actually Asian session. So if you're trading actively the Asian or the really the Australian session, which overlaps the Asian, but I don't have Australian on here, I just have the Asian. So just understand that the time should be 7 or somewhere around there when it begins. This is 9 p.m. but regardless, you know that we are in the Australian session a little bit before this, according to what I have here, 5 p.m. Let's see. I'm not sure. So this is for MetaTrader, but I'm not sure. Actually, I'm thinking now. These might move based on just this and not have anything to do with MetaTrader, because actually, for years I used MetaTrader until I started. For about 2 years I used MetaTrader until I started trading on TradingView recently, last few months or whatever. But anyway, the point is that this is Australian session, starting about right here and then coming over here. But we're just basically looking at what we have on a chart. This indicator just has these three time sessions on here. So anyway, my point is that if you're looking for a trade at night, boom, right here you go. Now that would have been a risk entry, obviously. So you barely break structure here, you wick through. But what's interesting is when we get this reaction off of this expected level with this confluence at this other key level, then what happens is that's interesting. We get a triple confluence right here. And let me just change this color so we're not confused. I hope that's okay. Let me change this thickness so that it's a little bit more clear. Okay, so here we have that larger time frame, Fibonacci extension levels going on, and then when we do get that reaction, what do we have? A retracement. It's about 3 o'clock in the morning. We get this retracement to this key level and to this Fibonacci optimal trade entry level after this reaction and this little bit of a break of structure. So this is an awesome entry, which would have given you some nice profits to take down here. And then, oops, I didn't really mean to move that, but I was going to anyway in a minute. So then with the next entry, let's see, open, like right here, you get another optimal trade entry. It does not have a key level in that zone, but you still could have, you know, took profits here on that trade, and then maybe entered another one, took profits here, and then just kept walking this doggy all the way home. This one was a little bit of a fail in terms of going based on that one, but so what is to look for? You could say, well, the daily high and the daily low, right? Okay. Or you could say the weekly high. Depends on how you want to trade, right? So you got to do your back testing to see how you want to do it. But let's say you did the weekly high and low, and you got your perfect entry right here. Just depends on how you did it. Maybe you said, probably most people, I would think, would place it on I don't know, it just depends on how people think, but it's either going to be that one, this one, or this one. Obviously is the major one, and that's where we got the reaction. So look at that trade. I mean, that is totally insane. How could you possibly expect that? But, you know, if you're holding on, right? So let's say you take that entry, and let's say, you know, God forbid you took all of your trade off the table right here, which is not a horrible thing to do depending on how many positions you have. With trade of 8 with Top Step, I can only take 2 positions currently. So yeah, taking 1 position there and having to risk possibly the market turning around. A lot of times, yeah, I would just probably close full and then just miss all this. But look at how insane that is. And that's fine. You can make a lot of money. You can get extremely rich just taking profits at the 0 level, and even if you miss all this. But what becomes tricky is you're thinking, oh man, now we have to retrace up to this. And yes, we did, but it took a while. So you're trying to think, man, is the market going to keep going down? Is it going to go up? We get a break of structure finally, and then you know, another break of structure, and then we finally start getting some decent entries over here. Sort of, basically, you know, you have different things going on depending on how you want to approach your trading, but you know, and this is like not like meant to be a tutorial or anything, but it looks like what happened was there was a reaction off of this this previous high right here, turned in, so that was resistance, turned support. The reason I'm drawing that is because we don't really have any optimal trade entries until like right here. Like, because if you draw it now, it's gonna get really messy. Let's see, I guess this was kind of one right here, huh? Let me change the color. So here's an optimal trade entry, long. The problem is there really wasn't, this structure wasn't really broken until after that. So and do you really draw an optimal trade entry off of there? Wouldn't you think, okay, let me draw it here, just realistically speaking, and you never would have got your entry. So, you know, that's not perfect, right? Moving on. And what would you say here? You know, that's not, so an optimal trade entry is not always like the thing. So how do you know? Well, I don't know yet. I'm still learning. But there's here's something to think about. If you think that price is going to retrace up to here, okay, and you think, man, we've gone too far. We got to go back up, which may or may not be the case, depending on, like, you have to look at like your average true range, and like if I had to guess, let's just take a look on this day. Let's find out what the average true range was on the daily. On this right here. Okay, back when we have right here. Average true range. Okay, on this day. You know, I would say going into that day, I would just call it 0.00, 625 to be safe. 0.00625. Okay, let's zoom in. .00625. Let's look at what the actual range for the day was. Roughly. .00625. So what we would be expecting reasonably is this level right here. Let me just do this. Hold on. If I can. We would be reasonably expecting this range. I know it's hard to see. We would be reasonably expecting this range based on our average true range. Okay, we had much more than that, as you can see. 625. What was the actual daily range for this one? Was about 1225, so about twice. And the reason I drew it down here was because I was just thinking where you might reasonably take your entry or something. But essentially twice the average true range right here. That being the case, you have to think, man, we're probably going to have to see some kind of retracement. And you think that you saw this, you saw this, you saw this, and then you saw that, and that might scare you. But I think you can reasonably expect some kind of retracement. Okay, and so that's what we had. We had a retracement. Now, let me get rid of some of these things. So we know that happened. We already looked at that. Okay. So now we know some kind of reasonable retracement to expect. Reasonable expectation of a retracement. Okay. Fibonacci where? Probably here, huh? Okay. Boom. Look what happened. Retracement. Obviously, this is a huge level. Okay. The 63,750. Okay. But look what happened. It's got, we can reasonably expect it, at some point. Obviously, these days trading, you might be bullish, trading up, looking for optimal trade entries. Like right here's one. Here's another one. I think. Let me check that real quick. Not really. That's not really, unless you're drawing, like I said, you know, you probably would have. Now, oh, here's something to mention actually before I go on. Sometimes in this case where you're expecting an optimal trade entry, let me zoom in to this. Don't forget that right there. Okay, look out. So there was a spike there that I didn't see. See that spike? So that's where we put the top of the fib. Let me fix the color. Okay, now you can see it more clear. So look, you have your optimal trade entry expectation for this day, okay, based on the previous day's high and low. Now also look where your inversion level is, your previous high, your previous resistance. Now it turns into support right here at this you know, basically Fibonacci level. And actually, before I go any further, I know I'm like kind of skipping around a bit, but I want to draw attention to the fact that there's levels here that I haven't drawn yet, and I'm going to draw them in now. Okay, so here's that orange halfway level between, we're in this 1000 level between 63 and 64, and this is halfway. So this is going to be an orange level, just a small level with the 1 pixel. But you can see after I drew that, obviously this is a yellow level, and there's a yellow level down here as well. This is going to be the 250 yellow level. Okay, I'm not going to draw. And look how price reacts beautifully off of that. And then I'm not going to draw a yellow level here because I just understand that it's a more significant level than just a 1000 quarter level. This is actually a 10,000 half quarter level. So on the scale of 10,000, you have quarter levels, right? 25, 50, 75, $1. Well, halfway between is this white level here on the 10,000 scale. I hope you're following me. But anyway, so here we have a beautiful situation of confluence where we can reasonably expect, after a day where the Australian dollar dropped twice the average true range, we can expect a retracement. Okay, now we draw that Fibonacci, okay, and we're expecting price to draw up to here, right? So what do we do in the meantime? We buy, right? So we had optimal trade entry here, right? Remember? It's gonna be like super messy, but just real quick, you got that optimal trade entry there with the confluence of this level. Let me hide that real quick. So look at this optimal trade entry right here. Even though there was no breakout structure, we can reasonably expect. Now, where would you have drawn actually? So like I said before, so maybe you drew it down here, right? And but this is what I was trying to mention earlier, is that even if you do have an optimal trade entry like this, you're trying to wait for it to retrace back to here. If there is a key level above the 61.8 retracement level, then you can sometimes see a reaction off of the key level that's right above that. If you're looking for a buy, because that key level is in this case more significant than the retracement level. There's not really any levels down here. This is the level. If you had a situation where, let's say you drew like the Fibonacci here, well, you see it broke down past this Fibonacci, because in this case this key level is still more significant than these, but the key level is below the 61.8 and the 70% retracement level. But your entries, according to ICT and Michael Joe Huddleston, your entries should always be at the 61.8. And he doesn't say this like necessarily, but I'm saying this, but he did kind of hint at it, and I guess he teaches it. I haven't gotten through all his videos yet, but I'm saying that you have to be on the lookout, right? Bow low for these key levels, right? And so, you can reasonably expect, no matter where the optimal trade entry is, that basically, you're going to be looking for price to be drawn to one of these key levels, right? So, if you draw it there, you're good to go. If you draw it there, you still could be good to go. If you understand that you should probably go and buy right there, with the expectation that price is probably not going to go down too much further, because we're due for some type of retracement. Now, where's that next one that I drew right here? Okay, let's close this, and so we can see now we're looking for Wednesday's entry. Wednesday's entry is going to be based on Monday's high and low, and so we can see a perfect retracement down to this 63,500 level, and boom, you can take partials here and try to get a little bit more in the trade, but ultimately, you see 61.8 and it retraces off of there. So I would have probably took full profits like up here, honestly, or maybe left something on and see if, and then take profits up here, because I would expected a reaction up here, but ultimately price drove up to 64,000 level, which is less significant than this level. So in this case, actually, okay, let me restate what I was to say. So depending on volume, right? So if you look at the volume right here, just an explosion up to this, there's a reasonable expectation with that volume that price is going to go higher, right? So if price had done something like this going up to here, then we can expect that's a little bit weaker price action there. Not that it's weak necessarily per se or whatever like that. I'm just saying it's weaker than this candlestick right here. This is more volume. I don't know. I don't think does it have okay, so we can see the volume on this. Let's see. Actually, the volume is not that telling, is it? But that's a strong candle. Anyway, so I'm not 100% sure exactly what to say about the volume in this case, but I do like to look at it, and I'm trying to learn, basically what it really means. I've got a lot to learn, because you think, oh, look at that volume, it's going down, but then it goes up. So, you can't just assume that something means something, and that's why you have to back test and kind of prove your concepts. But anyways, so that we're coming up to here. Okay, boom. So your expectation is a reaction off of the 61.8, because that's where you buy and sell yourself, and so you're thinking, okay, well, everybody else does too, for the most part, either there or the sweet spot, the 70% retracement level, or the 0.705. So anyway, you take your profits for the day. You're very happy. You're very, very happy about that. Okay, and so we hide that. Come to back the next Fibonacci, previous day's high and low, here and here. You got another optimal trade entry. Honestly, you want to look at your volume coming back down. So it's fairly heavy here. Get a bounce, and it's sort of weak here. I would have been thinking almost to buy right here. Honestly, I probably would have just bought right here. With this volume, I would have been hesitant, right? But when we get above here, knowing myself, I need to get to know myself better, but knowing what I know about myself, I probably would have bought right here. And then I would have been, waiting for the reaction off of here, hoping that I didn't get my clock cleaned here, but then when price moved up to here, probably would have again. Now you got to think: are you already in a sell? If you're already in a sell, you might not be buying right here. You might be waiting for price to drop, and then you shit your pants right here. Because you sold right here. Has anybody ever really shit their pants because they were like I don't know. People say that all the time, but I've never seen it. God forbid. But anyway, so whether you're a buyer or seller here, the point is that you could have taken a buy with the expectation of price going higher if you wanted to. That was your entry there. And I guess something you could say about that is the fact that it did blow up through here, but it got to that 61.8 retracement level. But you gotta understand it didn't reach this level, and doesn't have to. Like, some assets don't always reach the level, but in this case, the reason that it went back up, I guess as far as what I can say, is that it went to this level, the 64,000, and then reacted beautifully off of the higher time frame 70% retracement level, and then this 64,000 level, and then came on down on downtown, and you didn't really get another entry, like optimal trade entry necessarily. Like, you have these small ones right here, so you got but let's just say you took full profits here or partial profits. Let's say when you got up here you took full profits, right? So then what are you waiting for? You're waiting for some kind of reaction. Okay, boom. Now on a smaller, if we were to, I don't know if it's gonna let me. I'm not sure how far back I can go. Like on a smaller, like I'm not sure if I can go on a 5 minute there. It might just not let me go that far back. But okay, there we go. Let me actually check this real quick. That's not even doing anything right now. That's crazy. All right, so let's look on a smaller scale. Okay, so we have a break of tiny break of a tiny change of character here, break of structure here, optimal trade entry here. So you see that change of character, break of structure, optimal trade entry, boom. And you could have rode that puppy all the way to the bank. Let's see where you could have drawn your fib. You could have drawn it there, or here, I guess. But you might have missed it if you drew there, unless you were just really excited, which is honestly sometimes, like, especially if you get the what do you call, I've been saying it the whole video, correlation, or you get two things at once, the 64,000 and then that 61.8 retracement level kind of being in the same spot. I probably would have got really excited and just sold somewhere. That's what I like to think anyway, but it's a reversal. You're up there, you're in the zone, it's the heat of the moment, price is moving, what are you gonna do? Sometimes you just got to get in, somewhere decent, and just kind of hope for the best. But this is the move that broke the camel's back. This is the move that broke the camel's back. You got the change of character here and the break of structure here, and so I guess you could draw your fib from here to here, and that would be a pretty smooth move, with the expectation that price may go up and tap even through this possibly 64,000 level. Regardless, though, a nice, awesome, completely amazing trade that just blow your socks off in terms of risk to reward. Completely amazing, because you have to understand that is a tiny little fraction of the price action for the day, and it just went completely exploded on down. Remember that our average true range for the day is 625. Okay, so let's say you only were trying to get your average true range. You could see a lot of people doing that right here. It got to the average daily true range, and everybody's taking profits right here. Boom. Look at that. Everybody's taking profits. Okay, and that should be, that includes me. Like, you know, I'm that guy. So there is another actual optimal trade entry right here to get in. But at this point, we've run the daily range, and that's something to always be aware of. The fact that we've run the daily range. So how could you know? In the heat of the moment, you have to think. You don't know. You know, you're not sure. Well, is price going to keep going down? And now we have a lot of levels here. What are we going to do? Let's see. Put it on a blue. So, you know, you could have gotten in again with a little bit of risk, but at least you took a massive amount of profits here, down here. So if you want to get in as like a smaller, probably what I would, if I was going to try to do that, I'd probably go in at a smaller risk for that part. But yeah, how could you know that it's going to continue going down? Okay, actually, that's a reasonable assumption of that, but look at this retracement. Reasonable assumption of that based on this higher time frame Fibonacci, which eventually it does tap into the very bottom and then explodes on up and doesn't come back down for a while. It actually goes back up and takes out this high and then goes down, which is why I always say you never go wrong with just taking profits at the zero level. You know, I mean, you imagine, I don't even want to think about it. But you got to lock in profits. You lock in profits. Walk away a winner. You know, and that's the key. That is the key. That's the master key to trading. So anyways, I could continue going on and on and on and on about this. But basically, yeah, you know, you could have kept trading that on down, obviously. So, but like I said, you know, you're going to want to take your profits here, because you never know what could happen. But you know, if you want to leave something on, certainly do that. But you know, once again, let's double check our average true range. It seems to be, for the daily, it seems to be a little bit maybe more volatile on this than some other assets. Let's see. Average true range at this time, 630, maybe. Like, that's why I just say 625 is playing it safe. But we know, based on what we just saw, that price was really doing a lot. You know, I mean, it was really doing a lot. Let's see the actual range for that day. it's a little bit messy now. Now that we're coming back home to where we were. When you're explaining it, you're like, yeah, I get it, and then you walk away and you're like, oh man, what happened? So about 950. Yeah, but you know, it's, if you got the range of the day, if you run the range, if you can get an entry up here and run the range and take profits down here, oh my God, you're a king. You are a king. Okay, you're a king. I mean, that's it. In terms of trading, and you don't need any more than that. If you get the range of the day, the bulk of the range of the day, you're good to go. Take the day off and go home and go somewhere, do something, you know what I'm saying, and enjoy your life. But man, if you really had an expectation that it was going down here, bruh, you could have annihilated it. I mean, look at that. You know, if your risk tolerance was high enough and you were hungry enough and you really believed that it was gonna continue down, I mean, I'm not sure exactly how you would know that, but you know, if you wanted to take that bet. Now, it's worth noting that on Top Step, you cannot be in a trade between 4 p.m. and 6 p.m. So you still could have took this trade. You just had to have took profits right here. It looks like that was a lot of that going on right here. So maybe there's other Top Step traders that are trading this as well. Because, you know, a good opportunity is a good opportunity. So anyway, it's exciting. I mean, looking at all this, I think so let's clean this up a bit, and then I gotta go over here later. I'm not gonna do it right now, but you know, usually what I'll do is I'll just I guess I'll just put all these in a group together, and I just keep everything organized. And that's how I like it. So, but I do that for everything. Like, but I'm gonna, and then it's worth noting also that for my quarter series levels, I'll have different. I'll have one for the large, one for the medium, and one for the small. But what you just saw was me going from a blank chart with nothing on it to basically exactly what I used to trade. And don't pay any attention to this trade because I'm not paying any attention to it, obviously. That doesn't mean anything. So, but continuing onward, previous daily high on the previous daily low. Let's see. I don't think that's going to be optimal trade entry there. We would still be expecting bearish prices, but actually it is optimal trade entry. And it just so happens to be right there at that key level. So boom, you could sell right there. Boom. When price gets down to either here or here, wherever you want to take profits. But yeah, doggone it, take profits. You know, that's what I'm going to be doing. Taking profits. Close enough is close enough. You do not have to hit your, you know, if price gets close to your where you were expecting where you were expecting price to get to for your take profit. It's just like, just take your profits. Like, you don't have to get the full, like, obsessing about money is not the right way to trade. What you should be focused on, what I am focused on, is winning. And so that's a win. When it goes down, if I get out there, that's a win, right? If I get out there, that's a huge win. Now let's see. This trade took place actually outside of my time window. The reason I say that is because I could have entered, but then I would have had to get out like right here, and I would have missed all that because because Top Step, right? Let's check the daily range. So in this case, it did hit the daily range. Just barely nicked it, almost, not quite. But let's see. So how could we have reasonably predicted based on price action? You see, if you're just going, okay, we're not gonna go back to that. Well, I guess we could say real quick, if you didn't have Fibonacci's and you didn't have, whatever, that concept, if you're just going on market structure, you could have said, okay, higher highs and higher lows. Okay, let me buy like, well, I guess that would be Fibonacci, but, or maybe using trend lines or something. You can say, oh, let me buy there, and then it just goes down. I don't know. But this is what I use, and so I'm trying to think if I would, is there any reasonable expectation of, okay, so the fact that we went down 950 points here, remember, roughly, I like that as a round number to say, but significantly more than the average true range. And it's worth noting that well, this is a recent price action, October 18th, 2023, so still valid what's written in that book. Street Smarts actually talks about when the high of the day is near the opening, which I use midnight, okay, not this over here, 6 p.m. or whatever. I use midnight. So when the high of the day is close to the open, the daily open, right? And this is based on ICT, Michael Joe Huddleston, what he teaches, that midnight is the open of the financial day or whatever. So anyway, but Street Smarts teaches that when the high of the day is close to the open, and when the close of the day is close to the low, or the close, sorry, when the high of the day is close to the open and the low of the day is close to the close, that is like that's a sign that there's going to be a retracement the next day. And that's exactly what we see here. So I guess having that in mind, there would be a reasonable expectation of, by the way, Linda Rash wrote that book also with Connors. I forget his name. Is it Larry Connors, I think? So anyway, so with that said, there could be a reasonable expectation of Bolo being on lookout for a break of structure or a change of character and a break of structure and an optimal trade entry. So here here we have, I don't know if you really would want to call that a change of character, maybe, but that's kind of normal price action for it to continue down, because you could say, okay, we got a optimal trade entry here. See that right there, boom. And yeah, that actually is true. that was an optimal trade entry. You could make money. That's why I said, don't look for it to hit that 0 level. Take your profits above it somewhere. You know, don't expect a perfection. It's like, be happy with enough. Be content with enough. That's what Michael Joe Huddleston, ICT, says. So, yeah, but you could take that trade. And then, you know, actually another trade here. You could take another little tiny trade here if you want. But the point is, eventually you would have got blown out, and you get the real. So once this happens, then you can call this a break of structure, and you can call this a change of character. Until then, you don't really know. In this case, that's not, in my opinion, super clear that, like, oh yeah, that's definitely a change of character. But once we get this, it's like, okay, now it's looking like a break of structure. Unfortunately, it doesn't really give you much except for this right here. Okay, that little inversion level, basically. So, you know, if you wanted to try to basically enter there, you don't really get an optimal trade entry. I don't think, because we have to like zoom back out and get some perspective on where we are. Like, this is we're, you know, at the bottom down here. Okay, and in that case, it's just like what happened. Remember what we just talked about. We just talked about the same thing right here, about how price did not really come back down to optimal trade entry here, because remember we had this drawn and it didn't really get down there. But look where we were. We were way at the bottom of that move. Same thing here. We're way at the bottom of this move. Okay, and in that case, in that situation, look what happens. It does not give you an optimal trade entry. I don't not even have to draw the fib for you to see that that is not an optimal trade entry. Okay, but just like over here, it doesn't have to be. What you can draw is your previous resistance and look for that to turn support, and that's exactly what happens. Previous resistance turn support right here. And if you took that trade, that's an amazing trade right there. So with the expectation that price is moving to this higher time frame, optimal trade entry, and a bounce off this level. And I'm surprised that it did not go up to this level here. It's barely nicked above here. But you know, you never know. And that's why I say, you know, don't look for perfection. But look, you got your optimal trade entry right here. Boom, 61.8 goes down. You know, maybe take your profits here or here, whatever you want to do. But like I said, when you're trading top step, you'd have to get out here, and then it would took some balls. It would have took like a lot of nerve to re-enter after 6 o'clock. You know, this low. I could see entering up here, but down here that's risky, and I just say enjoy your time off. Don't do it. It's not worth it. So you get back down here, and honestly, this is not like it didn't end up being a great trading day. You know, you could say, well, change of character here, but you never really got a definitive break of structure, and it just kind of consolidated until the next day, broke down, finally tapped into this, then came up, gave us a wick, not really huge, but you know, I guess that could qualify as, it's a piercing, a puncture. You know, I don't know if you want to say that's a I don't know if you want to say that's a change of character, but this is definitely a break structure, and when this happens, you're like, oh, okay, that was probably a change of character. So, but it's almost too late. It doesn't really give you an entry before it goes up. So what do we do now? Let's see. Well, look where we are. We're kind of still, we're sort of still down low, right? Allegedly, you know, is what we can think. We're still down at the bottom of this, you know, area. So if we were thinking that way, we could say, well, let's draw and it didn't really go down there this time, but I'm not looking for what I want to see. I'm looking for, well, yeah, I am kind of looking for what I want to see, but at the same time, I just want to see what I want to see is what price did based on what I know, you know, based on what I expect. But it doesn't really matter. The only reason it matters what I expect is because I'm looking for price to repeat what it's done in the past, right? But other than that, you know, price can do whatever it wants in the moment. So it gets above here. Okay, it kind of comes down here, and that's why one thing I said about like close enough. Sometimes close enough is close enough, but if you zoom in, look what happens here. Actually, more precisely, we're still in the 5 minutes, so we're not even on the 1 minute. But look what happens here. Let me just do this. Boom, look at that inversion level. Now, you know, you could say, well, I'll draw on a fib from here to here and not giving them optimal trade entry. Okay, it's fine. But remember all those times where it was either a previous day's high or low or a session high and low. So in this case, you know, you've been thinking, well, fib from here to here and wait for an entry here, but you never got it. So it just depends on, like, you know, what you're feeling in the moment or what you're thinking or where you are. You got to remember we're kind of low here. We just had this huge rally and come back down. So what's really going on? Do we know? Are we bullish? You know, how are we feeling? What's the market sentiment? What is the, you know, what's going on, right, in general? So in that heat of the moment or in that moment, you know, trader's intuition or whatever you want to use to get the trade, you know, but you have to have that belief, that optimism, that winning attitude, that you can and will do it, and that'll help too as well. But like one of the things that would concern me about entry here would be, you know, that bearish volume right there. But you know, that's just something that I'm saying, because look what happened. Boom, it goes up. So what we really talk about is, you could say, well, that looks like change of character, so maybe we don't take a trade here, maybe we wait, right? So we say, that might be change of character. You see this clear breakout structure right here, and then what happens? So if you're just a little bit patient and you just wait for the right things to happen, you can see clear breakout structure right here. Now where do we draw our optimal trade entry? Maybe right there. Okay, so what happens now? Okay, well, you say, yeah, okay. You look at this, 63,500. Boom, close enough. Enter. Heat of the moment, remember? Yeah, you know, you're only getting like half your money, but that's all you need, like, of your risk. Like, you know, if you're in line with, in tune with, in sync with, in the zone, as Mark Douglas would say, of what's going on in the trade, in the market, in the day, in the week, in the month, whatever, in the year, in the hour, you know, if you're in tune with what's going on, in the 15 minutes, whatever time frame you're zoned into, then yeah, you can say, okay, pull the trigger and we buy here, and boom, you get a nice rally up. And so we can look at something, this key level here, we could wait for, right? We could say, reasonable expectation, we're going to blow through this. Why? Because there's not really a key level there. So first profits for me would probably be right here. As you can see, other people had the exact same idea. Okay, and then the more significant levels up here. So now if I saw this volume coming up to here, at first I'd be tempted to take profits right here, and I might close full. And then, but when I saw this, I would be starting to worry a little bit, and then this consolidation would be just too much for me probably, and I would just get out somewhere, and then probably miss, potentially miss this because there's not really optimal trade entry there, up there. So sometimes you miss a move, but look what happens. Well, once again, what happens? Okay, we have previous day's high acting as that point that was resistance turns into obviously support. So once again, this happens. Same thing happens over and over and over and over and over and over and over. So you could have bought again right here. Look at this. If you zoom in, perfect reaction. Look at that. Perfect reaction off of that one. So where's your reasonable expectation? Price going from there. Maybe it was just back up to here for a second, and then you take profits there, you catch a nice little bump there, and that's fine. Or maybe you held on until you saw, because you did see some reaction off of here, and that's what that is. People who probably either bought somewhere previous or maybe even right here, and they sell right there for a little quick scalp. And then all this resistance turns into support right here, and it rallies up. You get a reaction off this 61.8 level that we already no, that's a new Fibonacci there. Yeah, so that's actually an expectation that we had when we took that one there. Hold on, that's a different one. Let me get rid of this. Yeah, so we already took this trade here, got out down here somewhere. It went back up, it went higher. So there's a reasonable expectation of something happening when we get up to here. So if you did take this trade, I would be thinking, man, I'm probably gonna get out right here. I'm not gonna risk it. It could be a double top based on the previous price action. Let's see. Previous price action, not a double top really, but we went up to here, and a lot of times you'll see, when it comes to a fib, sometimes it'll come retest the lower level and then go down, right? So reasonable expectation of it continuing down all the way down to here, right? But in this case, it went up and blew out anybody who didn't take profits down here at this inversion level. If they sold off of this, you're thinking, okay, here's the money. I'm holding this for a week. And then if you held it too long, boom, look at how this got taken out. This is why sometimes I would say this for sure, 100,000%. It's more profitable to be a day trader than it is to be a longer term trader, because you get more trades, you get frequency, you get what do you call, ICT. Michael Joe Edison calls it, laser guided, whatever, precision strikes, frequency, high frequency trading, that a human can do, like me, a human can do better than a computer any day of the week. So humans are far superior than computers, even though computers can compute. They can't do what a human can do. So anyway, the combination could be pretty powerful. So definitely, for sure. So that's what this is, a combination of me, a human, and this computer computing. So so anyway, if you took a trade off here as a day trader, you could have a reasonable expectation of taking profits when they present themselves available in the market. And then if you saw this double bottom right here around this inversion level, you could have said, okay, let me just humor the market and take an entry here with a low risk. If it goes down, you're out of the trade with a small loss. Big deal. But it didn't. It went up, and actually you ended up with optimal trade entry right here. Or not really an optimal trade entry, but you get the idea. It's what actually happened was, I know I keep drawing these things, but it's just right there, man. It does it like over and over. And then that resistance turns support. After this double bottom, you get a change of character, break a structure, another break a structure, comes back, retest this support, turn resistance. I mean, how many times have we seen that just in this presentation? I call it a presentation. I mean, it was just meant to show you the quarters theory level. Actually, the reason I started out was just to show you what I was doing. Basically looking to trade some other assets. And anyway, but how many times have we seen it? Change character, break a structure, come back, retest this, resistance, turn support, and then take off. Like, it's crazy. Now we get up to here, we get to the 64,000 level, which we got to before. We went a little bit higher. What's up there? Nothing really is right here, except for well, that's a white level, which I didn't draw. That's a tiny white level. That's what that is. Tiny white level. The 125. So that's that level right there. Price just kind of barely nicked at it, and then boom, it took off like a screaming eagle on down to get his prey. And look at that. That is totally crazy. I could have been in that trade all the way from up there to down here. It looks like that's always happens where you see people getting out around. You always see a consolidation between 2 and like 6. So we see that over and over and over. But anyway, that's a hell of a trade right there. That's let's say you got in here. That'd probably be me. And then you stayed into right here. That's 150 ticks. probably just take profit right here. So that's like about 150 ticks right there. So heck of a trade. But anyway, I could keep going on and on and on and on and on. But I'll save that maybe for another day. I feel like this is long enough. I feel like I've done enough. I didn't mean to do all this, but I just wanted to look at some past price action, as you can see. But I'm going to take a break. I don't want to overdo it, because I'm here to have a good time. I'm here to enjoy myself, doing what I love. And so yeah, so if I don't want to do any more right now, then that's what I'm going to do, is take a break. So hold on, let me just leave that on there while I zoom out so I can see exactly where that was in the scheme of things. Yeah, so from there it ended up crashing down, taking out these equal lows, which is to be expected, and then it just completely rallied up unbelievably from there, and that's where we are now. I'm bullish on this after this analysis. The expectation that I have is that we take out all of these previous highs. I'm not claiming to be an expert, but if I had to guess what was going to happen, which I just started looking at this market, but you see how we came from this extremely high level here, and then we got down here, okay, and we came back up to here, and then we came back down, failed to make a lower low than this. So that's going to put me bullish. That's going to put me bullish. And how I'm feeling is, let's see, what is it actually doing long term? Long term, I mean, it's been going down, look. What if we got up above these highs eventually? How long would that take? I mean, that would take a while. I mean, that would take years from now. But what if we went up there before we went further down, right? Who's in a trade that long? That's what I want to know. Who got in a trade in 2018 and is still in that trade in 2023? I don't know. Probably nobody. I would think. I would wonder. I would really wonder. Because you think probably a lot of people, when he got down here, took their profits, or even right here, and then that rally up to here, and it comes back down. I don't know. I don't know. It just seems like we should be bullish for a while. Maybe at least work our way back up to here before continuing down. I don't know. I think that would be something more fundamental, and I am not currently at this exact moment equipped to talk about that. So hopefully in the future I will get more fundamental knowledge and awareness. And I live in America, so I can't say that I know much about Australia, other than it's an awesome place that's a dangerous place, in my opinion, for somebody who loves the beach. So yeah, it'd be cool to travel there, but I wouldn't want to live there. But anyway, yeah. So I don't know. I think I'm kind of bullish for now. I think it's just too tempting not to go above at least these levels before going down. But then, you know, you look at that crash. I guess I don't really know. You just kind of have to. I was just basically looking at what I wanted to look at, and what I did look at was how price reacted around the levels, and that's what we looked at, and that's maybe all you could do, you know, from day to day, is just look at what is price doing this week and today. And there's a lot more price analysis that could be done. For example, when is the low of the week, and where is the opening, Sunday opening price, and you can mark all that up, and you can see certain patterns and things. So like, for example, Tuesday we hit the low here, boom, went up. We had Sunday open over here, we dipped down and then went up. That is if you think of like a bar chart, you can see we had the opening of the week, the low, the high, and the close. Kind of roughly. The close is actually up here, so it was a very bullish week, which would insinuate bullishness here. And we made the low of the week on Tuesday here. We're actually in Tuesday now, so you know that could be signaling bullish as well. Interesting. If we look, the high of this week was on Tuesday. The high of this week was midnight going into Wednesday. The low this week, the high this week was Tuesday. Specifically Tuesday, right before the Asian Open, and this was Wednesday, right after the Tuesday-Wednesday Asian session. So during the Asian session over here, the high of the week. During the Asian session over here, the high of the week. Let's see. During the Asian session, the high of the week over here. During the Asian session, we got a double bottom, but the actual low of the week was Tuesday, New York. So if this is the low of the week, if it is, that's New York. Coming back over, continuing our analysis. So that was Tuesday, and you can mark out all these Sunday opens. Low of the week, Tuesday, New York, a double bottom during Asia. We saw that earlier. high of the week, low of the week. Okay, this one was not exactly that same pattern, but okay, so that was low on Wednesday, high on Friday, a high on Wednesday, and then low on Thursday. So, it's not perfect. Low on Wednesday, high on Friday, a low on Tuesday, and actually kind of basically the high on Friday there, but it wasn't much. High on Wednesday and another high on Friday. So it's not always double top right there, boom, before it goes down. People that say, I know the ICT and Michael Joe Hudson, I know they say that retail doesn't work or whatever, and they bash it and stuff, but you cannot deny that it is on the charts and that it does work. It's just that it shouldn't not be the only tool in your bag, but I think it's asinine and egotistical to say that my way is the only way that works, but whatever. It's sometimes the creator of something believes in it so much, that's how they were able to create it, and if that's what they have to believe in order to be the creator of something great and amazing, like ICT Michael Joe Huddleston, if that's what he has to do is completely bash everything else in order to be that person who creates so many great new things, if he has to say that everything else sucks in order to do that, then that's fine. And I'm not saying he's necessarily right or wrong or whatever, and just saying from my observations, I tend to see Head and Shoulders working. I tend to see double tops and double bottoms working all the time. But like I said, I think it has to be in conjunction with, key levels, optimal trade entries. And I don't know that much about ICT's more recent material. I'm basically a student of, so far, his older material leading up to basically the 2016 mentorship. So I haven't even made it that far yet. I'm still learning the stuff that he taught in 2013, and so I'm working my way forward from the beginning. So anyway, but yeah, I guess what I'm trying to say is I'm bullish for right now, and let's see if my trade starting to turn around. Yeah, so we'll see what happens. But I'm very interested in this market. I'm very interested in trading this, and I'm going to see what I can do with it. And I'm still interested in trading New York. As far as S&P, NASDAQ, and maybe even the Dow Jones, or the US 30. But yeah, I'm excited for all the opportunities and possibilities, and so the whole reason for this video was to say that basically I'm looking to add on more opportunities for more profits, especially during while New York is slow, and that's why I was looking for something that I could trade while New York is sleeping, which would be Australia, because right now it's right in the middle of the heart of their trading session. It's 11:30 here. So it's basically, in Australia or whatever, this is their time where they're awake and they're trading, and Tokyo too. This is that overlap right here. 7 to 3 a.m. my time. So we're right in the heart of it right now, right in the heart of it, and that's what I'm looking for, and that's the reason this video is about. Is what is I was looking for, what is the opportunity, what is the best opportunity available to me, and I think, based on what I've seen so far, I think this is probably going to be it, and I'm excited. So anyway, that's the point of this video. This video is gone 2 hours, and so with that, I'm going to close the video. And but yeah, if you watched this video, thanks for watching, thanks for hanging out with me, and I hope you learned something or got something out of it. And yeah, thanks for watching, and yeah, all right, cool. Well, let me end the way I always end. All right, thanks for watching.